Welcome to the Growth Room. Today we're exploring one of the most unconventional and influential books on entrepreneurship and wealth creation, The Millionaire Fastlane by DeMarco. In this audiobook summary, you'll discover why the author challenges traditional financial advice, how businesses create leverage, and what principles can help you build long-term financial freedom through value creation. If you have ever been told that the only way to get rich is to get a good degree, land a secure job, live below your means, and invest whatever is left over into a mutual fund for 40 years, this summary is going to challenge everything you think you know. We are diving deep into a framework that completely flips the script on conventional wealth building. This isn't about cutting coupons or waiting until you're 80 years old to finally enjoy your life. It is about understanding the mechanics of leverage, exponential growth, and true producer psychology. Let's start by looking at the man behind the philosophy. DeMarco wasn't born into wealth, nor did he find success through a lucky lottery ticket. He was a regular guy who grew up watching people trade their best years away for a paycheck, only to realize that the traditional path promised a reward that arrived far too late. Driven by a burning desire to achieve financial independence while he was still young enough to enjoy it, he took a completely different path. After years of struggle, late nights, and multiple failures, he built a highly successful internet-based business. He eventually sold it for a life-changing payout, bought it back, grew it further, and sold it again. He achieved total financial freedom in his 30s. DeMarco wrote this book out of absolute frustration with the mainstream personal finance industry. He noticed a massive contradiction. The gurus who preach a lifetime of extreme frugality and steady stock market investing aren't actually rich because they followed their own advice. They didn't get rich by clipping coupons or stuffing money into an index fund. They got rich by selling millions of books, seminars, and financial products to people desperate for a way out. They are producers, selling a slow-motion dream to consumers. DeMarco wanted to lift the curtain and reveal the actual mechanism used by self-made millionaires who build massive wealth rapidly. To understand this philosophy, we must first draw a clear line between simply becoming rich and achieving true financial freedom. In DeMarco's view, society has conditioned us to chase an arbitrary number in a bank account or a collection of flashy luxury items. But true wealth isn't just about material possessions or having a large net worth. The author defines genuine wealth through three fundamental pillars, which he calls the three F's: family, fitness, and freedom. Family represents your relationships, your human connections, and your ability to be present for the people you love. Fitness represents your physical health, your energy, and your well-being. But the third pillar, freedom, is the ultimate catalyst that protects and enhances the other two. Freedom is the power to live life on your own terms. It is the ability to choose how you spend your hours, where you live, what projects you work on, and when you wake up. True financial freedom means your time is entirely your own. If you have a massive income but are bound to a demanding corporate desk for 80 hours a week, completely lacking control over your schedule, you aren't truly free. You're just a highly paid prisoner. The core philosophy of the book rests on a simple, liberating truth. Wealth is not an event, it is a process. When we see a young entrepreneur sell a software company for $50 million, or a creator build a massive platform, society focuses entirely on the headline. We see the flash of lightning, the massive payout. But that payout is merely the final event of a long, often invisible process filled with systematic execution, risk management, and immense value creation. You cannot have the event without the process. If you try to skip the process by chasing financial shortcuts, hot stock tips, or get-rich-quick schemes, you're setting yourself up for failure. To change your financial reality, you have to change the entire road you are traveling on. DeMarco introduces the concept that everyone travels down one of three distinct financial roads throughout their life: the sidewalk, the slow lane, or the fast lane. These roads are more than just financial plans. They're complete psychological mindsets that dictate every decision you make regarding money, time, and personal responsibility. Let's dissect the very first road, the sidewalk. People who travel this path are known as sidewalkers. This road is characterized by a complete lack of financial structure, foresight, or long-term planning. A sidewalker essentially lives paycheck to paycheck. It doesn't matter if they earn $20,000 a year or $250,000 a year. Their financial state is permanently fragile because their spending always rises to meet or exceed their income. The defining trait of a sidewalker is a pure consumer mindset. They view money not as a tool to buy freedom, but as a direct license to purchase immediate gratification. When a sidewalker gets a raise, a bonus, or a bit of extra cash, they don't think about investing or building an asset. They immediately think about what they can buy next: a newer car, a bigger television, designer clothes, or a more expensive vacation. They are trapped in a cycle of instant gratification, constantly chasing the fleeting high of material possessions. They mistake lifestyle inflation and looking wealthy for actually being wealthy. Because of this constant consumption, sidewalkers exist in a state of absolute financial vulnerability. They're always exactly one major life disruption away from a complete economic catastrophe. A sudden medical emergency, a layoff, an economic downturn, or even a major car repair can instantly shatter their financial reality. They have zero leverage and no safety net because they have traded away all of their future security for present-day comfort. What makes the sidewalk path so dangerous is that it completely detaches wealth from personal accountability. Sidewalkers often believe that financial success is entirely a matter of luck, privilege, or random chance. They blame their employers, the government, the economy, or their circumstances for their financial hardships, completely failing to recognize that their own daily choices are what keep them anchored to the spot. They are hitchhikers on the road of life, letting external forces completely dictate their destination. They have surrendered control over their time and their financial destiny. If the sidewalk represents a reckless lack of planning, the second road represents the exact opposite extreme. It is the path embraced by the vast majority of well-meaning, hardworking people all over the world, the slow lane. This is the traditional path of safety, compliance, and deferred gratification. In our next section, we will unpack exactly how this road operates, why it has become the default setting for modern society, and why its structural limitations make it an incredibly risky strategy if your goal is true freedom while you are still young. The slow lane is a path built entirely on a lifetime of compromise, sacrifice, and deferred gratification. It is the roadmap explicitly handed down to us by parents, teachers, guidance counselors, and mainstream financial experts. The script is deeply familiar to almost everyone. Study hard in school, get good grades, secure a mountain of student debt to obtain a specialized degree, land a stable corporate job, climb the ladder, clip coupons, live well below your means, and diligently invest 10 to 15% of every single paycheck into a diversified portfolio of mutual funds or index funds. Then, if the markets behave exactly as planned over the next 40 years, you will finally step into the sunshine of retirement at age 65 or 70 as a millionaire. DeMarco challenges this conventional wisdom directly, calling the slow lane a highly flawed plan that sells your life away for a deferred dream. Think about what this roadmap actually asks you to do. It demands that you sacrifice your youth, your highest energy years, and your most vibrant decades to buy a few comfortable years at the very end of your life. You are literally trading your Monday through Friday to get Saturday and Sunday back. You are selling 5 days of corporate labor just to buy 2 days of weekend freedom, hoping that when you're elderly, your health will still allow you to travel the world or enjoy the wealth you spent a lifetime hoarding. Let's look at the actual mathematical structure of the slow lane. The primary engine of wealth on this road is your job. When you rely solely on a salary or an hourly wage, you're locked into a very rigid equation where your primary income is determined by multiplying your internal value, your skills by the total number of hours you can physically work. This creates a massive structural limitation: time. No matter how brilliant, educated, or dedicated you are, you only have 24 hours in a day. You cannot scale your time because your income is directly tied to a non-scalable asset, your physical labor. Your earnings cap is firmly locked in place. Furthermore, the secondary wealth engine of the Slowlane is compound interest via traditional investments like the stock market. While compound interest is an incredible mathematical phenomenon, its real-world effectiveness is completely dependent on two critical variables: a massive amount of starting capital or an immense amount of time. Since a standard job prevents you from generating a huge surplus of cash rapidly, the Slowlane formula relies almost entirely on the passage of time, usually 4 to 5 decades. You are essentially betting your entire financial future on external forces completely outside your control. You are gambling that the stock market will grow consistently without crashing right when you need to retire, that inflation won't erode the purchasing power of your saved millions, and that you will remain healthy enough to live to see the finish line. Now, let's be fair and distinguish the author's stance from universally accepted financial advice. Conventional finance teaches that steady, long-term investing is the safest and most reliable way for an average individual to build a comfortable retirement nest egg. And for a vast majority of the population, it absolutely is a massive improvement over the reckless consumerism of the Sidewalk. The Slowlane teaches discipline, budgeting, and fiscal responsibility. If your goal is simply to be comfortable in your old age and you enjoy your corporate career, this path works. However, DeMarco's core point is that the Slowlane is structurally incapable of delivering rapid wealth or youthful financial freedom. It is a defense-only strategy designed to prevent poverty in old age, not an offensive strategy designed to create massive, life-changing abundance quickly. If you want extraordinary results, you cannot rely on ordinary, linear paths. This brings us directly to the third and final road, the Fastlane. The Fastlane is a completely different operating system for your life and finances. It is the path of entrepreneurship, deliberate value creation, and scalable business systems. While the Sidewalker exploits the present at the expense of the future, and the Slowlaner sacrifices the present for the sake of the future, the Fastlane focuses on a hyper-efficient process that creates massive value in the present to secure total freedom for both the near and distant future. At the absolute center of the Fastlane philosophy is a radical shift from a consumer mindset to a producer mindset. Instead of looking at the world through the lens of what can I buy or what can I consume, a Fastlane traveler looks at the world and asks, what can I build? What problem can I solve? Or what value can I provide to thousands of people? They don't just buy products. They study how those products are manufactured, marketed, and delivered. They don't just consume online content. They analyze the business model, the distribution channels, and the underlying audience psychology behind that content. The Fastlane trades employment for true business ownership. But it is vital to clarify that not all businesses are created equal. Many people quit their traditional jobs to start a small consulting practice, a freelance gig, or a local service business, only to realize they have accidentally created a glorified job where they are still trading their direct time for dollars. If the business cannot operate, grow, or generate revenue without your physical presence every single day, you haven't built a Fastlane system. You've simply bought yourself a job where you happen to be the boss. A true Fastlane business is a highly scalable system that is intentionally decoupled from your personal time. It is a structure engineered to leverage systems, technology, automation, and organizational design so that it can run independently. When you build an enterprise that solves an actual marketplace need, automates its core operations, and distributes value to a massive audience, your wealth equation changes completely. Suddenly, your income is no longer capped by 24 hours in a day. If your software application solves a critical problem for 10,000 businesses globally, or if your e-commerce platform automates the delivery of a physical product to thousands of customers daily, you create exponential leverage. You can grow your revenue by 1,000% without needing to work 1,000% harder. This capacity for explosive, non-linear growth is what allows a Fastlane entrepreneur to compress a lifetime of Slowlane wealth creation into a handful of years of intense, highly focused execution. It is the only road where true time, freedom, and massive financial independence can realistically coexist while you are still young enough to fully experience them. To fully understand why the fast lane works while the slow lane stalls, we have to look directly at the math. Wealth isn't a mysterious phenomenon governed by luck. It is governed by a very specific mathematical equation. If the inputs to your equation are limited, your output will be limited. If your inputs are limitless, your wealth can become limitless. Let's break down the traditional slow lane wealth formula first, so we can see its structural flaws. The slow lane formula relies on two primary variables: primary income, job, and wealth acceleration, market investments. Slow lane wealth equals job income plus market investments. Your job income is structured as your hourly or salaried rate multiplied by the time you work. Your market investments are structured as the principal amount multiplied by compound interest over time. Look closely at the variables in that equation. The absolute cap on your job income is the fact that there are only 24 hours in a day, and you can realistically only work a fraction of them. Your salary is capped by what the market is willing to pay a single human being for an individual role. The cap on your investments is time. Specifically, the 40-year timeline required for compound interest to turn small contributions into large sums. You have zero leverage over these numbers. You cannot force a day to have 50 hours, and you cannot force the stock market to reliably return 100% gains year after year. Because the variables are fundamentally restricted, the final outcome is restricted. Now, let's contrast that with the explosive mathematics of the fast lane wealth equation. The fast lane breaks free from individual time entirely, replacing it with variables that can scale into millions of units. Fastlane wealth equals net profit plus asset value. Let's dissect the first part of this equation, net profit. In a Fastlane business, your net profit is calculated by multiplying units sold by your unit profit. Net profit equals units sold unit profit. This is where the magic of scale and leverage comes into play. If you are an employee climbing the corporate ladder, you cannot simply decide to clone yourself 10,000 times to increase your income. But if you own a scalable business asset, such as a software application, a digital product, a specialized e-commerce brand, or a media platform, your units sold variable can grow exponentially. Consider a practical example. Imagine you develop a software as a service, SaaS, tool that helps local restaurants automate their inventory tracking. If you charge a modest subscription fee of $30 per month, and your overhead costs are minimal, your unit profit is incredibly high. Let's say $25 per month per user. If you serve 100 local restaurants, you are making $2,500 a month. That is a nice side hustle, but it isn't wealth. However, because your software is a digital system, your capacity to expand is not bound by your physical location or your personal hours. Through effective digital marketing and strategic partnerships, you can scale that customer base from 100 restaurants to 10,000 restaurants across the country. Let's run the math on that transformation. 10,000 users multiplied by $25 unit profit equals $250,000 of net profit every single month. The amount of time you personally spend overseeing the software does not need to increase 10,000 times to support that growth. The underlying system handles the leverage, but the equation doesn't stop at net profit. The second, and often most lucrative, part of the Fastlane formula is asset value. In the entrepreneurial world, a profitable business is an incredibly valuable asset that can be bought, sold, and traded like real estate. The value of a business is typically calculated as a multiple of its annual earnings. If your software business is generating $3 million in net profit per year, a private equity firm, a competitor, or a larger corporation might value your company at a conservative multiple of 5, 8, or even 10 times earnings. Suddenly, your asset is worth $15 to $30 million. By scaling your net profit, you simultaneously create an absolute mountain of equity in the asset itself. When you decide to sell that asset, an event often called an exit, you instantly convert that abstract asset value into massive liquid cash. This is how founders achieve what society calls overnight wealth. It wasn't luck, It was the inevitable mathematical result of building an asset with variable inputs that allow for massive leverage and scale. To protect yourself from pursuing the wrong business opportunities, DeMarco outlines a strict evaluation framework called the 5 Commandments of the Fastlane. These principles act as a filter, allowing you to look at any business idea and instantly determine whether it has the structural integrity to create true wealth or if it is just a disguised, low-paying job. The author uses the acronym CENTS to define these rules: control, entry, need, time, and scale. The first principle is the commandment of need. This is the ultimate law of business, and ignoring it is the #1 reason why most startups fail within their first few years. The marketplace does not care about your passion, your desires, your hobbies, or your personal financial goals. The market only cares about one thing: solving its own problems and fulfilling its own needs. Far too many aspiring entrepreneurs start businesses based entirely on what they love to do. They love baking, so they open a bakery. They love fitness, so they become a personal trainer. While passion can provide fuel, a business built solely on personal passion without a corresponding marketplace demand is a recipe for financial disaster. To build a successful Fastlane enterprise, you must look outward, not inward. You must actively scan the world for friction points, inefficiencies, inconveniences, systemic complaints, and unresolved pains. When you find a clear problem that a specific group of people is struggling with, and you engineer a high-quality solution that alleviates that pain, the marketplace will happily reward you with their money. Wealth flows to those who add immense value by solving problems for others. The second principle is the commandment of entry. This law states that as the barriers to entry for any given business opportunity decrease, the exceptional profit potential of that opportunity decreases along with it. In other words, if anyone can start the exact same business as you in less than 10 minutes with zero specialized skills and $50 in their pocket, you are facing an incredibly steep, uphill battle. Think about common trends that flood social media platforms: dropshipping generic products, basic affiliate marketing, or signing up for a standard multi-level marketing program. Because the barrier to entry is virtually non-existent, hundreds of thousands of people rush into these spaces simultaneously. This massive influx creates extreme competition, driving profit margins straight to the floor and turning the space into a highly volatile lottery. To achieve true Fastlane status, your business must have a strong barrier to entry. This barrier could be unique proprietary software, specialized operational expertise, deep brand equity, or a highly sophisticated supply chain. If starting your business requires a steep learning curve, intense effort, or unique problem solving, that is a massive advantage. The difficulty of entry is the very wall that protects your future profit margins from being wiped out by the crowd. If you do engage in a business with a low barrier to entry, you must commit to executing it so exceptionally well that your specific operation creates its own high barrier. Next up is the commandment of control. In the world of wealth creation, the person who owns the platform always makes the rules and collects the lion's share of the profit. If you are building your entire business on someone else's infrastructure, such as relying entirely on a single third-party marketplace to sell your goods, or building an app that can be shut down instantly by a single policy change from a tech giant, you do not have control. You are essentially a tenant, not a landlord. If the platform decides to alter its algorithm, raise its fees, or suspend your account without explanation, your entire income stream can vanish in a thin air overnight. A Fastlane entrepreneur strives to maintain absolute control over their business ecosystem. This means owning your own digital real estate, controlling your pricing, managing your own distribution channels, and building a direct, unmediated relationship with your customer database. You want to be the driver of the vehicle, never a passenger at the mercy of someone else's sudden turns. The fourth principle is the commandment of scale. This law goes straight back to our wealth equation. Your business must have the structural capacity to reach a massive audience. If you open a physical boutique coffee shop in a quiet suburban neighborhood, your maximum daily revenue is naturally restricted by the local foot traffic and the physical seating capacity of your store. It is structurally localized. It cannot scale unless you undergo the massive capital expense of opening hundreds of new locations. A Fastlane business, however, is designed to be location independent and capable of serving a broad market. This is why internet-based businesses, software applications, national product brands, and digital content platforms are so incredibly powerful. Their ceiling isn't limited to a single neighborhood or city. Their market is the entire connected world. When your system can seamlessly scale its distribution from 100 people to 100,000 people without a linear increase in overhead costs, your wealth potential becomes explosive. Finally, we have the commandment of time. This is the ultimate test of a Fastlane business system. The business must have the ability to detach itself completely from your personal physical presence. If your business requires your hands-on labor for every single dollar it brings in, like a consultant who must personally show up to bill for hours, you haven't built a Fastlane system. You have merely created a highly demanding job where you are the employer. A true Fastlane enterprise utilizes automation, software, standard operating procedures, and hire talent to ensure that the wealth generation machine runs 24 hours a day, 7 days a week, whether you are awake, asleep, or on vacation. The goal is to build an asset that acts as an autonomous money tree, freeing your time so you can focus on high-level strategy, creative growth, or simply enjoying your life. By applying this CENTS framework as a strict filter, you can instantly evaluate any entrepreneurial path. If an opportunity fails multiple commandments, if it has low barriers to entry, offers zero operational control, and cannot scale beyond your local area, it is a clear sign that you're looking at a slow lane trap. But when you identify an opportunity that satisfies these laws, solving a genuine user need, protected by high barriers to entry, fully under your control, scalable to a massive market, and automated to preserve your time, you have found a genuine Fastlane vehicle. It is through this intentional systems design that true financial independence is achieved. To turn these concepts into a living, breathing reality, we have to transition from abstract theory to practical entrepreneurship. True entrepreneurship isn't about wearing a fancy title or updating your social media bio. It is the gritty process of systematically identifying friction points, engineering high-value solutions, and constructing automated operations. Every massive business empire starts with a simple shift in how you view the world. Instead of walking through life as a passive consumer, you must look at every interaction through the analytical eyes of a producer. When you encounter a clunky website, a frustrating customer service call, a delayed delivery, or a software tool that is confusing to use, your immediate thought shouldn't be to get annoyed. Your thought should be, how can this be fixed? Is there an underserved audience willing to pay to have this pain removed? Building a system around your solution means shifting away from individual labor toward automation and organizational design. If you design a software tool, you write code that automates a task that would otherwise take a human hours to complete. If you build an e-commerce brand, you leverage fulfillment networks and automated digital pipelines so that a customer can place an order at 3 o'clock in the morning, have the payment processed instantly, and have the tracking number generated automatically without you lifting a finger. This is what it means to own your systems. You move from being the primary engine of your business to being its chief architect. This transformation requires a radical rewiring of your personal mindset, specifically regarding how you calculate risk and reward. The mainstream world looks at entrepreneurship as an incredibly reckless, high-risk gamble. They think staying a steady corporate job for 40 years is the ultimate definition of safety. But a Fastlane thinker looks at the equation through a completely different lens. To a Fastlane mind, relying entirely on a single employer for your survival is the ultimate risk. If your company downsizes, reorganizes, or goes under, 100% of your income can be wiped out instantly by a single executive decision. You have zero control. Conversely, starting a scalable business is a calculated, asymmetrical bet. Yes, it requires an immense investment of focused effort, deep discipline, and initial capital. But the downside is strictly capped, usually limited to the time and money you invested to get the venture off the ground. The upside, however, is completely uncapped. If your system succeeds, it can generate millions of dollars in profit and give you a lifetime of absolute time freedom. This brings us to a major cornerstone of the Fastlane philosophy: taking complete, unyielding personal responsibility for your financial trajectory. True producers never blame the economy, their upbringing, or external market conditions for their situation. If a product launch fails, they don't complain that customers are wrong. They analyze the data, realize they didn't hit the commandment of need effectively, and iterate their solution. They understand that their current net worth is a direct reflection of the total volume of value they have brought to the marketplace. Now, let's explore how these timeless principles apply responsibly in today's modern world. The internet, advanced automation tools, and the digital landscape have made it easier than ever to build systems. But they have also made it easier to get distracted by shiny objects. If you are a student, a young professional, a freelancer, or a content creator looking to step onto the fast lane, you cannot rely on outdated tactics. You have to understand how to leverage modern, highly scalable business models effectively. Let's look at a few powerful modern avenues. Software as a service. SaaS. This remains one of the ultimate Fastlane vehicles because it perfectly fulfills the commandments of scale and time. Once a software developer or an entrepreneur builds a digital platform that solves a workflow problem for a specific industry, like helping construction firms track their equipment, the cost to replicate and distribute that software to the next 10,000 users is virtually zero. E-commerce and proprietary brands. Moving far beyond generic dropshipping, modern entrepreneurs create unique physical products, secure their own supply chains, and build authentic brand equity. By utilizing global distribution networks, they can scale their customer base worldwide while maintaining complete control over their brand messaging and pricing. The creator economy and digital products. Content creators, educators, and software developers are tapping into the massive leverage of digital media. By creating high-value online educational programs, specialized code libraries, or niche digital tools, they can package their expertise once and sell it to a global audience millions of times over. It is absolutely crucial to note that these models are merely examples of scalable systems. They're not magical, guaranteed paths to instant wealth. A SaaS company or an e-commerce brand will fail just as fast as a traditional brick-and-mortar storefront if it violates the core Fastlane laws. Success doesn't come from the trendy industry buzzword. It comes from your commitment to the underlying framework, solving deep problems, building protective barriers to entry, maintaining strict operational control, and automating the system to free your time. When your scalable business system begins to thrive, your focus must naturally expand into the art of long-term wealth building and capital preservation. A massive mistake many first-time entrepreneurs make is thinking that a highly profitable business will run forever without evolution. A true Fastlaner understands that a business is an active wealth generation asset, but the ultimate goal is to convert that active business equity into absolute, passive financial independence. This transition is achieved by systematically constructing multiple income streams and investing your business profits into highly secure, yield-generating vehicles. When your business produces a massive cash surplus, you don't use that capital to fund a bloated, hyper-luxurious lifestyle. Instead, you treat your profits as soldiers. You deploy those dollars directly into liquid financial assets, such as real estate, index funds, treasury bonds, or dividend-paying assets that generate passive income completely independent of your business operations. This creates an unbreakable dual-engine financial system. Engine number one is your active Fastlane business, which provides rapid, exponential growth and massive cash injections. Engine number two is your passive investment portfolio, which provides rock-solid stability and consistent, predictable cash flow. When the passive income from your investment portfolio completely covers your ideal lifestyle expenses, you have achieved total, permanent financial freedom. Your time is entirely unlinked from survival, and your wealth is completely bulletproof. To successfully navigate this journey, You must actively avoid the common psychological traps and tactical mistakes that cause most people to stall on their financial road. The first major pitfall is chasing shortcuts. The internet is filled with people looking for the latest hidden hack, the trendy exploit, or a secret trick to get rich without putting in the work. They jump rapidly from one business trend to another, never committing to the deep, gritty process of building a real system or solving a real problem. They are perpetually looking for the event while completely avoiding the process. Real wealth requires execution, focus, and a willingness to stay with a single problem until you break through. The second devastating trap is lifestyle inflation. When an entrepreneur experiences their first major financial win, the temptation to immediately buy the luxury sports car, the massive house, or the high-end designer wardrobe is incredibly intense. This is a sidewalker mindset bleeding into a fast-lane reality. If you ramp up your personal spending at the exact same rate that your business revenue grows, you're trapping yourself in a gold-plated cage. You're forcing your business to run faster just to sustain your high overhead, completely robbing yourself of the liquid capital needed to invest in permanent time freedom. Furthermore, many people get stuck in the slow lane simply because they possess an ironclad dependency on a single corporate salary. They fall into the trap of poor financial decisions, such as taking on high-interest consumer debt, buying depreciating assets on credit, and letting fear dictate their career moves. They avoid taking calculated risks because they are too comfortable in their predictable routine, completely failing to see that their comfort is the very thing preventing their growth. To bring all of these principles together into an actionable strategy, let's lay down the practical Fastlane framework that you can begin executing immediately, regardless of where you are starting today. Step 1 is to develop highly valuable, specialized skills. You cannot solve complex marketplace problems if you possess ordinary, easily replaceable skills. Dedicate yourself to mastering high-leverage domains like software development, systems design, digital marketing, copywriting, or advanced data analysis. Your skills are the very tools you will use to build your system. Step 2 is to actively scan the market and identify problems worth solving. Stop looking inward at what you love and start looking outward at what the world lacks. Listen to the complaints of business owners. Look for daily inconveniences in your own industry, and pay close attention to spaces where people are actively spending money but remain deeply dissatisfied with their current options. Your goal is to find an underserved niche where you can add measurable value. Step 3 is to build a scalable, controlled product or service solution. Design a business asset around your solution that explicitly obeys the commandments of CNTS. Ensure you maintain strict control over your infrastructure. Build clear barriers to entry to protect your margins, and engineering the product so it can be distributed to thousands of users worldwide without your direct physical intervention. Step 4 is to aggressively reinvest your profits and automate your systems. As the business grows, don't drain the cash flow for personal consumption. Pour the capital right back into software, automation, standard operating procedures, and talent so the enterprise can begin running completely on its own, systematically converting your active labor into an autonomous wealth machine. Step 5 is to take those massive, automated business profits and deploy them directly into safe, income-producing assets. By converting your business equity into reliable passive streams, you build a fortress of total independence that guarantees your freedom for decades to come. The ultimate Fastlane recap. To bring our journey to its definitive conclusion, let's look at the absolute biggest lessons we've uncovered from the Millionaire Fastlane. Wealth is a process, not an event. The massive payout is just the final, visible flash of a long, structured journey of execution, risk management, and value creation. The producer mindset wins. True financial freedom requires you to step off the sidewalk of instant consumption and step onto the stage as a producer who actively designs, builds, and distributes solutions. The power of CNTS. Every business vehicle you choose must serve a genuine need, possess a protective barrier to entry, remain under your absolute control, scale to a massive scale, and decouple from your personal time. Avoid the classic traps of chasing superficial shortcuts or letting lifestyle inflation anchor you to a desk. Commit instead to the long-term, calculated path of systemic entrepreneurship. Thank you so much for listening to this complete audiobook summary here at The Growth Room. If this deep dive challenged your perspective on wealth and inspired you to take control of your financial destiny, please hit that like button, subscribe to the channel, and drop a comment below sharing the number one insight you're going to apply to your life today. Here at The Growth Room, our absolute mission is to bring you the world's most powerful insights on entrepreneurship, wealth creation, investing, productivity, mindset, and personal growth, giving you the practical blueprints you need to design an extraordinary life. Remember, you are entirely in the driver's seat of your own vehicle. The traditional roadmap wants you to compromise, settle, and wait until old age to finally experience freedom. But the Fastlane proves that with the right framework, intense execution, and a commitment to solving real-world problems, you can achieve true-time freedom and massive abundance while you're still young enough to fully live it. Stop waiting, stop consuming, and start building. Your freedom is waiting for you.